This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, this lecture is on Chapter 5 of the free lecture notes of paper F2, and it's headed up Ordering and Accounting for Inventory. And there are two things in this chapter. One of them is just listing the various documents that are involved with inventory when you receive goods from a supplier, when you issue goods to customers, and so on. And the other bit is how we go about valuing the closing inventory. Now, the first bit, the documents used, is paragraph 2. And I'm not going to read all the way through that. It would be silly just reading the notes to you. Read it yourself and learn the various documents. Again, you're not going to be asked much about that. But you could have one or two questions just checking you know what documents are used. And you can see it's in various sections. The documents when we actually order goods from suppliers. The documents that are involved when we receive goods from the suppliers. The documents when we get the invoice for the goods. And the documents that might be used when we issue from inventory, either to the factory because they need raw materials to produce our goods, or when we issue the finished goods to the customer. So have a read through. I say again, I shouldn't need, well, I'm not going to read it to you, that would be a bit silly. The other bit though is how we value any closing inventory, and here there are some numbers involved. It's quite good fun. But the point is, during the year, the month, the period, day by day, we'll be receiving goods from our supplier. We'll be issuing goods either to customers or materials to the factory. And the question is, how do we value them at the end of the period? And that may seem obvious, you know, if they cost $5 a unit, we'll value at $5 a unit. But the problem occurs when the cost has been changing. You know, at the beginning of the year, they may have cost $5 a unit, but the next time we bought some may have cost $6 a unit, and so on. So how are we going to value any that are left? And as you'll see as we go through with 3 examples, there are 3 different ways that we might choose to calculate the value. See what I mean? Look at example 1. JM Limited had the following material transactions during November. So at the beginning of November, we had 20 units in inventory and they'd cost us $4 a unit. We then bought some more, a receipt. On the 8th of November, we bought 140 and the price had gone up to $4.40 a unit. 12th of November, we issued some, so we sent 80 out to our factory. And then on the 18th of November, we received some more, but the price had gone up to $4.60. And then again, we issued some on the 26th of November. So throughout the month, we're receiving goods, we're issuing goods. And the question is, how are we going to value whatever's left? And how many are left? Remember, we started with 20. We then got another 140, so we've now got 160. We issued 80, so there were then 80 left. We got another 100, so that gave us 180. And finally, we issued 140. So at the end of the month, we've 40 units left in inventory. But did they cost us $4? Did they cost us $4.40? Did they cost us $4.60? That's the problem. As I said, there are 3 different ways that we could choose to value it, and 3 different ways could be asked of you in the exam. And the first one, for example 1, is something called first in, first out. Or FIFO. And as you'll see as we go through it, with first in, first out, we assume that whenever we issue any, we're always issuing the oldest ones. That we issue them out in the order in which we actually receive them. A bit like supermarkets. If you're buying milk at the supermarket, the oldest ones are at the front and the newest ones are at the back. because the supermarket's hoping that when you buy any, you're always buying the ones at the front, the oldest ones, and so any that are left are the newest ones. Unless you're like me and stick your hand to the back because you want the newest ones, but I think you know what I mean. But let me show you how it works with this example. Example 1, first in, first out. We start on the 1st of November. We buy 20 units and they cost $4 each. And so at that stage, how much do we have? Our balance at that stage, again, 20 units, they're $4 each. And so at that stage, obviously, they're worth 80. What happens then? We receive some on the 8th of November. We receive 140 and they cost $4.40. And so what's happened to our balance? We've still got those 20. In addition, 140 times $4.40. 140 at $4.40. Sorry, 140, $4.40 at 616. So at that stage, with 160 units in inventory, and if this was the end of the period, no question, they'd be valued at 696. But what happens on the 12th of November? 12th of November, we issue some. We issue 80. And which ones are we issuing? Well, we assume that it's with first in, first out. Whenever we issue any, it's always the oldest ones first. So those 80 that we're issuing, what did we have? We have 20 that were there at the beginning of the month and another 140. So we assume that we issue the oldest ones first. So those 20 go, and they cost $4 each. We're issuing 80, so what about the other 60? Well, we've issued the 20 we had at the beginning, and so the other 60 must be the next earliest. They must be 60 of those 440. And so what are we left with? Well, those 20 have now gone. We've issued 60 of those 140, and so we've 80 left, 140 minus 60, and they all cost us $4.40. And so at that stage, 80 at $4.40, our inventory is 352. Let's carry on. On the 18th of November, we receive some more. 100. They cost $4.60 each. And so what happens to our inventory? We've already got 80 there, appreciate. We now have another 100, $4.60 each, which in total is 460. And so we've now got 180 units. And the value of them, 812. Finally, 26th of November, we issue some more, 140. And which ones are we issuing? Remember, we've got 80 there, which costs $4.40. We've got another 100 there, which costs $4.60. Well, we assume with first in, first out, that whenever we issue any, it's the oldest ones first. So those 80 have gone. So I want to multiply that. Those 80 go. Oops. We're issuing 140, so what about the other 60? Well, those 60, the 80 have gone. Those 60 must be out of the next lot, the 100, and so they are 460. And so what are we left with? Again, those 80 have gone. We then issued 60 of those 100. So we're left with 40 units, and they're all $4.60. And so the value, 40 at $4.60, is 184. And on this basis, FIFO, we already knew there were 40 units left. I checked at the beginning. but using the FIFO approach, those 40 units would be valued at 184. Now, I hope that made sense, but in fact, FIFO you can do very, very quickly indeed. Because, think about it, if you're always issuing the oldest ones first, any that are left at the end must be the newest ones. And so we knew from the very beginning that there were 40 units left. They must be the most recent purchases. And the most recent receipt, the last one before the end of the year, we bought 100, they were 460. And therefore, we could in fact have written it straight down. You don't need to go through step by step, because with FIFO, it's always the most recent purchases. Here there were 40, the most recent purchase was 100, and so those 40 were all 460. Had there been 140 left at the end, well, they couldn't all have been 460, there were only 100. The rest of them must have been the purchase before. The rest of them would be valued at 440. Anyway, that's FIFO. However, I said there were 3 ways. The second way is Lifo, last in, first out. And what we do with Lifo, we assume that whenever we issue any, we're always issuing, not the oldest, but the newest. We're always issuing the most recent purchases. And imagine, I mean, this happens in real life sometimes. We may be selling nuts and bolts. Perhaps we have a big box of nuts and bolts. And whenever we sell any, we just take them off the top and sell them. Whenever we receive any, perhaps we just put them in the box and they're at the top. So if the newest ones are always at the top, whenever we sell any, it's the newest ones we're selling. Now here there is no quick way. We have to go through it step by step and look at example 2. It's exactly the same question as we did before, but this time we'll do it our last in, first out approach. Last in, first out. And so, what do we start with? On the 1st of November, with 20 units, which cost $4 each. And so our balance, at that stage, 20 units, $4. The inventory is worth 80. 8th of November, we received some, 140. We paid $4.40 each. And so our inventory, with another 140 units, so with 160 in total now, those 140 cost $4.40, which is 140, $4.40 is 616. And so at that stage, 160 units at a value of 696. But what happens when we issue some? 12th of November, we issued 80. There are 160 there, so where are those 80 coming from? Well, with last in, first out, we assume those 80 are the most recent purchases. So it's 80 of those 140 that are being sold. There are 80 of those 440 units. And so what are we left with? We've still got the original 20, which were $4 each. And we did have 140 at 440, but we've just issued 80 of them. 140 minus 80, we've still 60 left at 440. So we've got 80 units left, but the value, 20 of them are the old ones at $4, 60 are the newer ones at $4.40. So at that stage, our 80 units are valued at $344. What happens next? On the 18th of November, We buy some more. We buy another 100 units, and they're $4.60 each. And so what have we got now? Remember, we had 20 at $4. We had 60 at $4.40. We've now got another 100 at $4.60. And so we've now got 180 units. In total, they're valued at 80 plus 264 plus 460, 804. Finally, though, on the 26th of November, we issue 140. Now, where are those coming from? Remember, it's last in, first out. So those 140, first of all, we issue the most recent purchases, which are those 100. So 100 of them are $4.60 units. There's another 40. Well, they must be the next most recent 40 of those 60. So 40 of them are $4.40 units. And what are we left with? Remember, these 100 have gone completely. We've issued 40 of those 60. And so we're still left with those original 20 at $4. In addition, well, 40 of those 60 went. So we've also got 20 of the $4.40 units. What does that come to? 88. And so we knew before we've 40 units left. And how much are those 40 units going to be valued at? 168. And so it's a different value. What did we get using FIFO? This is Lifo, appreciate. Using FIFO, we got 184. Using Lifo, we got 168. It's not a question of which is wrong, which is right. It's up to us to decide how we're going to value. And sensibly, we'll do it the same way each month or each year. We don't keep changing. And also, it should make sense that Lifo is giving us a lower value here. Because if prices are rising, this is most likely the case, obviously. If prices are rising, FIFO will give a higher value because we're looking, those that are left are the most recent purchases. Lifo, you'd expect to give a lower value because those that are left are older purchases. Finally, though, one more way, which needs a tiny bit more care. Example 3, where we're going to use weighted average cost. And again, it's exactly the same example as we've just done twice, but this time we're going to take a different approach. And instead of trying to match them and saying, oh, FIFO, we're always selling old ones, or Lifo, we're always selling new ones, we value at the average. But it's not quite as simple as it may sound. We have to do it step by step. Just watch me and see how it works. We start on the 1st of November with 20 units at $4 each. And so as before, our balance, obviously, 20 units, $4 each, 80. We then buy some more. So on the 8th of November, we have a receipt of 140 units. They cost $4.40. So we've now 160 units in total. And, sorry, it's the same thing I keep doing each time. 140 at $4.40, 616. No problem. However, it's when we come to issue that we need to think. 12th of November, we issue 80 units. And with weighted average, instead of saying, is it the old ones or is it the new ones? We just take an average and we say the average cost per unit, we did have 160. In total, they cost 696. So on average, how much does each unit cost? On average, 435. And we say, okay, we've sold 80 of them, so there were 160. If we sell 80, we've 80 left. And again, instead of saying, oh, they're $4 units or they're $4.40, we'll value them at the average of 435. So the 80 units left at that stage would be valued at 348. But let's carry on. On the 18th of November, we received some more, another 100 units, and they're $4.60 units. So what's our balance? Add on another 100. We've now 180 units in inventory. They cost $4.60. And so the total value at that stage, 808. However, there's one more issue. So on the 26th of November, we issue 140. But again, we don't try and match them and say, oh, they're old ones or they're new ones. We'll value them at the average cost of the 180 that we had before we issued them. And so what's the average cost now? In total, there's 808 is the total value of the 180 we have. So 808 divided by 180 is 4, I'll do it to the nearest cent, 449 per unit. So the 180 we had at that stage are 449 a unit. We sell 140, so we've 40 left, and they'll be valued at the average of 449. 40 of 449, 0. 40 times 449 is, well, excuse me, I'll round it to the nearest dollar. It's 180. And so there we are. Now, that is perhaps a bit messier. You know, in real life, obviously, you can have lots of receipts, lots of issues. Not in the exam. In the exam, this is the sort of level. But in real life, there's a lot more workings to do. But of course, with computers, it's not the problem. The computer can be doing that automatically. That every time we issue any, those that are left are valued at the average cost of what was there immediately before we issued. But there we are, 3 different ways. And as I say, there's no best way. With financial accounts, they don't like you to use Lifo, but otherwise you can value them any way you want, as long as you do it the same way each year. However, we're doing management accounts. In management accounts, it's our choice. Be aware of those 3 ways. And again, I think you'd agree sensibly in real life. It would be sensible to use the same way each time. But Lifo or FIFO or weighted average. But there we are.